What's up, everyone? Welcome to Fear, Uncertainty, and Doubt, your weekly FUD pod, where we cover the most interesting topics in the crypto space and sometimes other topics from tech or macro as well. I'm Kevin, you got Carlos, you got Brian, and our new guest, Dennis, today. And together we're analysts, creators, engineers, and founders all across the crypto world. So I'm really excited to kick it over to Carlos. What topics would you like to start with today?
Dude, I think the obvious topic to start with today is BlockFi. I mean, I think we, again, talked about this last time a little bit, so follow the pod if you're not already. But we knew this was coming, right? Like the meme that you see on Twitter is the Grim Reaper going door to door and just killing all of these kind of like consumer funds that invest in crypto. Like everyone had exposure. Everyone had exposure to UST to some degree, and everyone's getting killed, right? So the latest news that I saw that we were talking about earlier was, BlockFi might get acquired for up to $240 million by FTX. But it seems like a lot of that is just, them kind of bailing out customer funds, and the actual equity is significantly lower. I think, again, we were seeing something like $25 million is the equity value on BlockFi, which is astonishing because can somebody remind me how much they raised at? I think it was a multiple
$4
billion.
It was close to $5 billion. Like a couple months ago.
So
or 6 months ago.
Those investors are going to be hurting pretty badly. So who led their last round? I think, was it like BCV or something? Led their last round at like $5 billion. What's going to happen to some of those venture funds?
But I know that Morgan Creek.
Yeah.
Morgan Creek, which is Pomp's fund, they were big investors, and so they were trying to find another package to bail out BlockFi, but ended up not being as enticing and good as FTX's deal, it looks like.
That's crazy.
I think other than Luna, this would be like the second CeFi / crypto entity to be down like 99%, right?
Yeah. And maybe Celsius when they're officially worth zero or negative amounts of money.
It's really crazy to think about how the Contagion spread, right? Because they all talked about Contagion this, Contagion that when Luna first happened in May. But it was kind of vague, and we're like, okay, but what do you really mean by that? And people were like, it's going to take a while for this to really spread and see the effects of it. It took months, like a couple months even, to like 3AC was the next domino to fall, kind of. And it wasn't all Luna, but I think they might still be alive if it wasn't for Luna. I mean, they had multiple bad bets, right? They had GBTC that went wrong. They had staked ETH that went wrong, but Luna was like 100+ million bad bet for them. And so that was definitely, theoretically, they may still be solvent and not bankrupt now if it wasn't for Luna. And so they fell, and then they effed up all these lending firms with collateralized loans. So it's crazy. Do you think the Contagion spreads even more? And if so, like, what's the next category? Or do you think it kind of stops here with Sam and other people backstopping?
Well, there's going to be
BlockFi?
more CeFi shadow banks like BlockFi. Just one came out today, that Vauld, which is Coinbase backed, by the way. They also froze withdrawals. So we're going to see a lot more of these, hey, we were a proxy for DeFi yield companies come out and freeze withdrawals because either they're illiquid because they're maybe doing like an STETH or vote escrow play with the money, or they face some of the contagion that we're seeing today.
Yeah, but they are a lending niche project or company, right? So I'm wondering where else the Contagion can spread out besides these lending companies, or is that kind of where it ends per se?
I kind of wonder also if there are private funds. So I know, like, obviously some people run like somewhat private like crypto funds that have exposure to these sort of assets, and like basically as they get kind of like hit with liquidations and stuff, I mean, are they going to kind of cause another like domino to fall as well? Or did we already see that sort of in the last couple of months with like all those like huge like price candles?
Well,
I think most of that is out there.
You think most of it is already priced in?
Yeah.
I think, yeah, I think a lot of it at this point, well, a lot of it was more just the lending everybody was doing to themselves too, right? Like there were a couple of big trades that just blew holes in balance sheets, but there was a lot of like lending that everybody's doing themselves. So who is still levered up? I think a lot of people have delivered. Some interesting places are maybe like massive VC redemptions, and maybe that triggers further sell off in various alts. But I don't think people were like super levered long like alts or even like I mean 3AC aside, we were maybe like super levered long like BTC or ETH. A lot of these massive leverage plays were like yield. We're all just yield focused, right? It's like ETH, staked ETH, GBTC, BTC, obviously Terra, UST. So it seems like there's a lot of that has at least been flushed out of the system. And honestly, like a lot of those things have entered, or not a lot of them, but 3AC at least has now entered bankruptcy. I don't know how that impacts necessarily the solvency potentially of some of these other things. Like if they're like bankruptcy basically puts a freeze on everything, right? So now people can't really pick at 3AC's carcass at the moment. So there's a lot of the selling that 3AC may have done, they can't do anymore. At the same time, I wonder if that also restricts the ability for some people to get money back from them. Although I guess they weren't really giving their money back anyway.
There's no money to give back.
There's no money to give back. That's a good point. So maybe stuff like that actually starts looking like a very very short term a net positive for the market, at least certainly from a pricing perspective. But
yeah, I think most of the liquidations are flushed out as well. If you look at what happened like January through spring, basically all of traditional finance deleveraged. And it was only like the crypto bros and the funds that were like still in position with leverage. And the smart ones decided to deleverage. And you had a long time and a lot of warning that the economy was going to get bad to start deleveraging. So I think we basically stretched that out over the spring and up until now. And there's very little huge positions left to deleverage.
Yeah, it's curious. I wonder if we just won't see those huge I mean, there'll definitely be some panic. I think it feels like we're heading towards a recession, and I think people are going to have to there's not going to be as much or any retail bid. So there's definitely further potential to go down, but it may not be fully liquidation or deleveraging driven. It may just be our economy is going into shit, or this free money regime is over. I guess to a certain extent, there's some implicit deleveraging there. But yeah.
One thing I am curious about is, so Dennis mentioned Vauld, and then we saw Voyager also do the same a few days ago. Obviously, Celsius is in probably the worst shape out of all of these. But do you think some of these have so they limited withdrawals, but do you think some of them have a path back to semi-solvency, or what do you think is the fate or future of this entire niche?
Man, I don't know. Actually, I think it depends on how big the holes in their balance sheets or the may not even be a hole in the balance sheet, right? It may just be an asset liabilities mismatch. So some of them may be recoverable in some form or another. I do think
I think they would need a credit line like BlockFi got from FTX to be able to make more money to recover that hole in their balance sheet. Otherwise, lost money is lost money. You cannot. Right. You're not gonna be solvent again suddenly.
Well, I mean, but I guess that's what I'm saying is they may not be the net, their net assets and liabilities may not be negative. It's just the current assets and the current liabilities, there's a mismatch there, right? So they either need that credit line to bridge the gap, or you're just going to see probably Sam or CZ come in and just scoop up the scraps that are left open. And then they can maybe buy it for pennies on the dollar of the assets that are actually held in there, right? As well as the customer acquisition and stuff like that.
Yeah, that's the other thing I wonder is like, to me, this looks like, so FTX play here looks like a major like retail acquisition, like customer acquisition play, because they basically get a ton of retail consumers for fairly cheap as long as those people feel that BlockFi like did them right. And so far what I've been seeing, because like I had some friends who had funds in BlockFi, I told them to pull out immediately just in case like we had another Celsius situation. They were able to get their money out. And so like as long as BlockFi could, uphold that consumer trust with that line of credit from FTX, then FTX basically just acquired a ton of customers and like the trust is kept. So it could end up being a really good play for them.
I would say BlockFi is the only brand right now from one of these like pseudo banks that is not tarnished. So
right. Like they still have the credibility
that last
intact.
standing brand is worth it right now.
Right.
Yeah.
Right. Who's this guy? Who's this guy Zach Prince, by the way? Because I saw him post on Twitter like, I can confirm we're not being bought for $25 million or whatever. And then I also thought that he got fired. So I don't really know kind of what's going on here. Does anyone know?
Well, I think he's confirming that they're not bought for just 25 million because that's the lower bound on the deal. To get to the 240 million upper bound, probably a bunch of stipulations need to be met by the company, including like not defaulting on $400 million line of credit, maybe some growth, maybe some better risk management, satisfying all customer withdrawals, etc. But I'd be curious if they're going to keep him around post-acquisition because, it's kind of on him that made all these missteps along the way.
Yeah, it kind of seems like the first people to go should be the executives in this sort of situation. Is like you chop all the executives and then you keep the product and the customers and you put a new team to manage that. That's kind of like more directly tied with FTX's like core operating principles, which have been pretty solid over the last several years.
And he has to tweet those things, by the way, because one of the steps is keep your customers BlockFi. So BlockFi Zach is going to say anything he needs to say on Twitter to make everybody still believe in BlockFi to get his check or severance check or whatever it might be.
Yeah, that to get his golden parachute, right?
Right, and I'm sure it's to sell like previous investors on the deal too, right? So some amount of like, it could still be worth a couple $100 million, which is only like an 80% markdown. It's 90% markdown. More than that actually. $200 million would be, that's not pretty.
So like I guess this is kind of my last question on this topic is BlockFi raised from, I'm looking at this, BCV, DST Global, Pomp, Tiger Global. They raised a ton of money from these firms. Do you think these firms are going to be totally out of crypto going forward, given like how badly they got wiped out? Because they're going to be going back to their LPs and they're going to be showing them like, we got wiped out of like hundreds of millions of dollars. And sure, this happens in venture, but like this was pretty big. I would say this is like one of the biggest fuck ups I've ever seen. Do you think that's like kind of done? Are they done with crypto? Are they done for at all? I don't think they're done for it as firms, but
I don't think they're done for it. Most of these VCs need to be well diversified. So like crypto is probably only one arm or one segment of their portfolio. So as long as they were well diversified, they should be fine. And they're still going to be interested in crypto come next bull run. If they were purely crypto VCs, like some of the smaller ones are, they may be done.
Gotcha. Yeah. Okay. Awesome. Yeah, so we have a couple other topics if you guys want to move on. I know one of the other things that I saw again on crypto Twitter was some guy, I forget what his handle was, but he was putting out a lot of FUD about USDC, and I don't fully understand. I don't fully understand his logic here, but I think he was saying like Circle, the company that like basically mints USDC. First of all, I should just give a primer for how I believe Circle works, because I think it's a pretty sick business. Basically, they are this company and they take in US dollars and then they mint a USDC token on a given chain. So like on whatever chain you want, they'll like mint a USDC token And it's probably like one contract that's very simple, right? It's like one very simple smart contract that mints this token. But then you can always take this token and you can burn it or redeem it with Circle, and they'll give you your money back. But how I believe this business works is they just take those kind of fiat dollars that you've given them, they print this magic internet money, and then they throw those fiat dollars into T-bills, probably yielding something like 4.5 or 5%. And they probably have different terms on the T-bills too. So they probably have like a stack of T-bills that are like very short term, a stack that are a little bit longer term. And T-bills are also like very liquid for anyone listening. Like you can pretty much trade them for US dollars. The market is very, very efficient. So they're kind of in a great situation in terms of their business. But the speculation is, I believe that they lent out like a ton of USDC to 3AC. And then there was like another diagram of all this like financial wizardry, which I didn't understand at all. But is there any legitimacy in this concern?
So I don't think that was the full picture. One thing that I read the same post said was that Circle was somehow paying its bank, Silvergate, 5% APR to store the cash there, which
Why would they do
doesn't
that?
necessarily make sense. Yeah, it's like they'd be the first customer of a bank to have to pay their bank to store money. So that basically that post was like, okay, you're already at -5%. The T-bills don't cover that. Circle's losing money, and then it threw in like some random 3AC relationship for good measure to try and really get the FUD machine going. But yeah, it doesn't seem like anything in that post was founded on real facts or even plausibility. I think it was just widely rejected across people with brains.
It circulated a lot though. Like he certainly knew how to get attention, because I saw it like circulate quite a bit. So maybe that's like a good strategy.
It's the name of this podcast.
Yeah, it's FUD season.
Getting.
Yeah, and so I didn't fully dive into that one, to be honest, but I did read Adam Cochran's thread about USDC. He started off by saying, like, if there's ever a discount on USDC, I'd be willing to buy all of your USDC. Like, don't worry about it. And then he went into, like, it was a really long thread about, like, Circle's financials, because I believe it is public and you can see the details of like the balance sheet and whatnot. He's like, this is why there's nothing to worry about based on like the information that is shared. And so I tend to be of that camp as well. Just not, I still hold like a lot of USDC in my business funds and not worried about it at all.
One
I think
thing
we're just at that, like, go ahead, Brian.
Yeah, I was gonna say. So, I mean, a couple things come to mind as I think about this a little bit too. This is a little bit more of a tangent, but so first of all, USDC is audited, right? So they provide audit reports. I think on like a monthly basis, potentially quarterly, but something to that effect, right? And this kind of goes back to our last topic too. Is it's a lot of advantages of stuff like DeFi is the continuous auditability of a lot of the balance sheets of various protocols and companies and whatnot, right? So a lot of these questions that people have in even the ability to spread FUD purely exists because of the opaqueness of the how some of these companies operate. Now, this isn't like a criticism of USDC. I'm similar. That's the stablecoin I trust the most. There's reasons you may choose not to use it, but I very much trust USDC. But just the fact that we can sit here and ask these questions, and that there may be legitimate reasons based on the actions of other companies to doubt the veracity of what Circle puts forth, is really like a very big argument for DeFi, in my opinion. Some of it's not, the tech isn't fully there yet. Not only the tech, just like the legal systems aren't fully there yet to I think completely support something like that on the blockchain. But yeah, every time we talk about these stories, or I'm thinking about this type of stuff, it's like, oh man, like the use case could not be more clear. And kind of this bear market has made it clearer and clearer as the months have gone on.
I think the other kind of stable coin that is, I would say, kind of like a blue chip stable coin is USDT. And there's traditionally been a lot more FUD around USDT, but recently SBF came out and basically said, like, I fully trust USDT. I believe the background with USDT is that their mechanism for like storing, like redeeming dollars, it's like, or redeeming is the same, but their mechanism for like kind of like storing the like equivalent value is a little bit different. I think that they have like a mix of like secured loans, like corporate bonds, some sort of like token investments, some cash, some T-bills, some commercial paper. And I think people were really worried that like this kind of mix of other assets could lead them into a spot where they can't really fulfill their promise of one-to-one redemptions of like USDT for US dollars in fiat currency. I think like, I'm a little bit of a sheep on this, and if SBF kind of like trusts USDT, I kind of do too, to be honest. And they have been around for a really long time, so their track record definitely speaks volumes. So I'm personally not that worried about USDT. Like the only thing that would concern me a little bit is if like some of their bonds or loans, I don't know if the loans got like defaulted on, or if the bonds kind of like went under. But like commercial paper, T-bills, like, I'm not super worried about stuff like that.
Yeah,
What do you guys think?
I think their fixed income investments have been a little bit further out in the risk spectrum, though. I think it sounds like they've been unwinding some of those. At the same time, I mean,
Exactly.
I don't say the FUD around USDT is necessarily fully deserved, but they've definitely acted like a lot sketchier over the years than like Circle, for example. I don't believe USDT. It's not like a U.S. based company. It doesn't have U.S. financial oversight, things like that. Like there are like reasons Circle provides, or there's a little more assurance around Circle, and that it's like a U.S. company. It's providing more frequently audited financial statements. I think a lot of this information has been like pried out of USDT over the years, which I think increases the like skepticism around it.
I think they're also based out of the Cayman Islands, which does not help.
I mean, let's put it this way though. I think Sam has basically said, listen, I'll underwrite any losses in USDT right now. Like, I think that's kind of what he's basically gone out there. Like, I trust USDT because I personally will back it for, a good chunk of the company, I'm sure. But like,
the commercial paper was actually a big point of contention because like the Evergrande thing, right? People were speculating that Tether had exposure to that and other like risky commercial paper, maybe in Russia, I don't know. But they were like, that's why they're unwinding like billions worth. They said that their goal is to get down to zero exposure to CP. And their huge batch is unwinding or is expiring at the end of July. So that will cut their exposure like in half, if I'm not mistaken.
They've already gone from 45 billion commercial paper down to 8.4.
Yeah. And another thing, I may be off here, but when Coinbase listed USDT like a year ago, or maybe it was a year and a half or 2 years ago, but I remember that being like, okay, my thinking, and I may be wrong here, because Coinbase lists a bunch of stuff these days. I was like, okay, if like with so much FUD surrounding USDT, Coinbase has like hundreds and hundreds of lawyers. I assume they would have gotten a sign off and like done some like maybe NDA protected look into USDT's exposure and stuff. And so that gave me quite a bit of confidence at that time that Coinbase was willing to list USDT because of that.
Yeah, I don't know.
I have no comment there, but I imagine there is some due diligence. But then again, like Coinbase also listed Luna, right? And had a USD
that is true.
trading
That is
pair.
true.
So
Exactly.
both of those are kind of shaky.
And
But
they list
I
all
don't think
sorts
we've
of
talked about like the motivation for why there's even USDT. But I don't know if you guys remember, but there were like a couple of big hedge funds that kind of banded together and were like, we're going to short USDT. and everybody laughed at them for it and are still laughing at them for it. But maybe those guys are the ones responsible for FUD and are trying to get it to depeg to kind of cause a lot of fear when the market is bored like it is right now.
Those were the traditional finance funds, right? And people on Twitter were making fun of them. They're like, these hedge funds spend billions shorting the wrong stablecoin. Because this was before the UST depeg. So I just thought that was hilarious.
It seems pretty hard to push that FUD, like especially if USDT's like books are kind of getting cleaned up, and then Alameda and FTX are also pretty much promising that they're going to support the USDT peg. It seems like a pretty hard game to win from those funds' perspectives. Like maybe at one point it was somewhat possible, but at this point it sounds like it's going to be kind of an uphill battle.
Yep.
So Kevin,
Also,
all
I
right.
think
So
I was going to say the timing around getting off of the commercial paper too is pretty smart. I mean, I think you only want to be holding treasuries and stuff like that at this point. So maybe they're a little fortunate that nothing completely blew up in their face with kind of where the economy is going. But the more they're able to get some of the commercial paper and stuff like that off their balance sheet, probably the better.
Exactly.
Yeah, so Kevin, I noticed another one of these that you had on here was Kucoin, which I personally know nothing about. But do you want to kind of give like a little 2-second explanation of what that is and what's going on there?
Yeah, so the high level gist is that there was, call it FUD, circulating social media, that Kucoin also was in trouble and would limit withdrawals, like these lending companies. And one little part of that is that Sam Bankman-Fried said that a lot of like third tier exchanges were secretly insolvent. But so far it seems like that was FUD or fake news, because Kucoin has not limited withdrawals yet, per my understanding. And also people were like, Kucoin is not even considered third tier. Like, maybe second tier, depending on some metrics, maybe even first tier. But a lot of people have been withdrawing successfully, as far as I heard. So, not sure. I don't want to make a prediction. I don't want to put a stamp on Kucoin like I would for USDC or even Tether. But it looks like they will be okay.
Generally, these exchanges make so much money that I don't see why they would suddenly be underwater, or have needed to take the risk that they did with any like loans. Obviously, some of these exchanges have downsized recently with layoffs, like Huobi, when their business gets cut, as well as Coinbase. But I didn't see a need that any of these exchanges who performed really well during the bull run needed to take on any additional risk like loans.
Yep. Makes sense.
Yeah, I agree. I mean, I don't have much insight into KuCoin. I think I actually have some money on KuCoin from like 2017. It's not clearly not that much, but yeah. Honestly, that's one of those where it's like I could believe it's almost like the perfect target, right? Like you could kind of believe it. Like everybody who's used KuCoin, at least it's been a while, right? This was back 2017, 2018. But anybody who's used it is like, this is like potentially a little sketchy, But so it's almost like the perfect target for this type of FUD. But
especially
at this point, it's unsubstantiated.
Yeah, they have a token too, so you're right about the target. Like someone could spread the rumors and short KCS.
That's a good point too. I didn't even think about that. Yeah.
And I think the craziest or most unbelievable FUD from my end, I don't think this was even really spread that far, but some people were like, Coinbase is at risk of these things. I'm like, dude, there's no way. There's no way. They don't even have like lending stuff, and I feel full confidence personally with some of my funds on there.
It feels like they have, we've talked about this before, but it feels like they have very limited like DeFi exposure, like direct like DeFi exposure to any of these like farms or, algo stable coins or anything like that. It just doesn't seem like they really jump too deep into that. So I think that's pretty unwarranted as well.
Yeah, definitely not our core business, not a huge offering. USDC lend itself got nixed. Um, and all our financials are public. You can just go look them up. We have like 6 billion in cash outside of customer funds. It's really hard for us to file bankruptcy right now and make a case for it.
I mean,
Yeah,
let's
this was just. Go ahead.
Yeah, I was gonna say, let's be clear. Like, anybody who's saying that is basically alleging some level of like Enron-ish fraud, right? Like, they have to publish all their financial statements, unless like the positions have drastically changed from quarter to quarter, which is unlikely. You're basically alleging that they're cooking the books because clearly, like the books that are present, they're fine. They can cover whatever issues.
Exactly.
There are no issues. That's what I'm trying to say. So you basically have to believe that, Coinbase, this kind of high-flying business, or had been high-flying, in the bull market, is also cooking their books, even though like it just doesn't make any sense to me. That fundamentally doesn't make any sense to me. So.
Did we want to talk a little bit about what's going on with Grayscale? Because that's kind of like a little bit more bad news for, I guess, crypto in general, at least from my perspective. And I would assume is adding some sort of like some level of downward price pressure to Bitcoin as well. Because it looks like, all right, the gist of it is that Grayscale wanted to get their ETF, I think, what is it called? GBTC. Listed effectively, and the SEC turned them down because I think their rationale was that there's too much potential price manipulation in that market, in that BTC market, and they didn't want any risk of market manipulation hitting retail investors like on, I don't know, regular stock markets.
To be clear, is the BTC spot market. They're clearly okay with BTC futures markets because they have a futures-based ETF, but they've decided that spot markets are manipulable, but futures markets aren't. But at the same time, sorry, I'm kind of taking over here, but at the same time, they've also said that like when they approved the futures ETF, that because of the oversight they have on the futures exchange, they're not concerned about manipulation in the spot market. But now they're saying, but the spot market can be manipulated in order to reject the spot ETF. So it doesn't really make a ton of sense.
Brian, can you explain this to me? Because I don't understand clearly kind of what this spot market is.
Spot market is just like Coinbase is a spot market, right? Like you can trade, your USDC or US dollars for actual Bitcoin, right? So a spot market is always going to be like, I can take custody of the asset, the commodity, whatever it is that I'm buying. The futures market, you're not actually taking custody when you enter a trade. Now, you may take custody at the end of the trade if you hold your futures to expiry. Then you either have to deliver or receive the asset that you're making a bet on.
And so the spot market represents the price at any given point in time, like the market price at any given point in time, where the futures market is more
for
like an option
for immediate delivery. So
where you're asking for delivery in the future at some price, and there's some contract price.
That would be a future, yeah. So it's like, and usually those futures, I don't know what, I've never really looked at the CME futures. I don't know what their expiries are, whether it's like monthly or quarterly. But yeah, so those, those futures markets all fall under, I believe it'd be like the CFTC's purview, because I think those are all traded on the CME.
Yeah.
But the spot markets, that's like, there's a lot of ambiguity there. Like nobody are really regulating the spot markets, right?
Right.
That's kind of where Coinbase is, where any exchange really is. Then you also have these like other futures-ish markets called perpetuals, which are in effect futures. There's no expiry to the contracts, but you're paying some form of like rate to hold your position, which is similar to what you're doing in futures too, right? Futures generally aren't going to trade at parity to spot, right? They're going to either trade above spot or below spot. based on kind of different preferences. Generally, Bitcoin trades above spot.
Gotcha.
Yeah. So in terms of Grayscale, I think a couple thoughts here. One is that it looks like the U.S. is going to be like one of the last major countries to approve a Bitcoin exchange traded product for spot, because other countries have already, if I'm not mistaken, like Canada and in Europe, like several different countries have. So looks like the SEC wants to hold out, but Grayscale is initiating a lawsuit. Per my current understanding, it's going to take like months, if not a year, to get any sort of resolution on that. And other people who are a little bit more bearish or don't like Grayscale say that it's just all for show, because Grayscale gets to keep 2% cut yearly, right? So they're saying that they have no incentives. They want to milk that all, even though it would be great for the crypto space in the long run to have that redeemable, so people can like get that back to parity.
I don't think you could make it redeemable. I'm not sure they could actually make it redeemable, or if they have to
That's
fully just like dissolve the fund. I think that
if
may
it's
be,
an ETF, it could be.
if it's ETF, it's redeemable, but they need approval from the SEC
Yeah,
to
yeah,
make an
exactly,
ETF.
exactly.
But what a lot of people, I think, some people at least, are calling them to do is just dissolve the fund. Because if they dissolve the fund, you could go and return your shares for the exact amount of Bitcoin, right? Because there's some sort of exchange rate between the shares you have and the amount of Bitcoin you get back. And right now it's trading far below that exchange rate, the discount. So if they just said, okay, we're dissolving the fund, immediately that discount closes. Now, I mean, if they dissolve the fund, I guess it's not necessarily trading anymore. But now, like, instead of you getting 70 cents on the dollar for your Bitcoin, you can just like turn your shares in. You get back your full allotment of Bitcoin for the amount of shares that you do own.
And so Grayscale's rationale for the lawsuit, I guess, is that like maybe the futures, like that futures market is like pretty similar as an investment vehicle, and they feel like this is being treated in kind of an inconsistent way with that existing instrument. So that's kind of interesting. That's interesting to see. But I wonder if they lose this lawsuit, what does that mean for kind of like future like crypto ETFs on the market? Are they all kind of screwed? Like, is that precedent in place, and are they all out of luck, or is this something that can be revisited later, even if this suit kind of goes through and fails?
I think it'll be revisited later. I think
Okay,
it's kind
so
of
it's not edged.
a symptom of American politics right now, where Gensler needs to provide a good image that he's hard on crypto and he wants his job to continue. So he's going to take this like really hard line for now, basically not doing anything or rejecting all of these proposals until things look pretty set in stone, and then he can start facilitating change when the politics want it.
Gotcha. So you think that he's going to be susceptible to pressure from like individual politicians who, are going to be more pro crypto once the dust settles a little bit?
Yeah, I think so.
I see. Interesting. Okay, interesting.
Yeah, I still don't. I mean, I suppose there is like a little more, perhaps like there's a little more danger in approving a spot ETF, because if you approve a spot ETF, that in theory should apply some sort of buy pressure to spot itself. And I guess like even
Definitely.
with the futures ETF, you'd expect there to be some sort of pressure applied to spot too. Although there's all sorts of like counteracting issues with futures, especially as it pertains to like futures rolls and stuff like that. But yeah, I mean, I wonder if that's part of it too. It's just like they're coming up with reasons not to approve a spot ETF because they fear what approving a spot ETF would look like for actually like the price of Bitcoin and potential like its place in the world. That's a little more conspiracy-ish, I suppose. But Yeah, because I'm not sure a lot of their arguments make a ton of sense, and especially since I don't know, like I said earlier, they part of the rationale for them being okay with the futures ETFs because they're like, oh well, the fact that we have oversight of the futures exchange gives us confidence that we'll have knowledge of manipulation in the spot market. But now they're like flipping the script and saying, oh well, we don't know what's going on in the spot market, so we can't approve the spot ETF. It's like what? There's like it doesn't make any sense.
All right. Shall we talk a little bit about, I think, what was our next topic, Kevin? Bear market consolidation?
Yeah, I mean, it's just kind of the next step for all these things happening, right? Like FTX buying up several struggling companies. Maybe some other players will step in too, like Binance, who knows? JP Morgan was thinking about buying Celsius's distressed assets, right? So I don't know what that is fully entailing. But just kind of curious to hear y'all's opinion about how we're going to emerge out of this like bear market with various consolidation on the CeFi side and also like maybe on the DeFi side. Like where do y'all see us emerging out of this from all this bad stuff that just happened?
I think certainly, I don't know, one thing that I'm pretty sure is going to happen within this like kind of winter bear market, whatever you want to call it, is that a lot of these more traditional banks or whatever are going to start kind of seeing where they can make moves into crypto because they know at this point that like this market seems like it's here to stay. It's been like pretty legitimized by players like Coinbase and FTX and Binance. There is a ton of consumer interest, even if that kind of like ebbs and flows with how the market is going. And it's kind of a great business to be in. So I think we're going to see some big players snap up some of these like maybe like distressed funds or products or whatever you want to call them to acquire a bunch of users and to kind of start getting a foothold into this market. So I'm pretty certain that like, you know, anyone from like Fidelity to Chase, JP Morgan, or I guess Chase, JP Morgan's the same, to Goldman are going to kind of look at, you know, how can I get my foot in the door here? Because this is a huge business and we can't miss out on this. And this is like a cheap buying opportunity, right? So I think we're gonna start to see some of that. And like FTX is already trying to do this. They're not TradFi, but like they're trying to do this with BlockFi to get that retail consumer market.
So you see a lot more marriage between TradFi and crypto.
I think so. Yeah, I think like TradFi is definitely going to try to fly into crypto here. They know the money is here, and they're going to be really interested.
Yeah, it'd be interesting to see who of TradFi comes in to try to build a sustainable business, and who of TradFi comes in to kind of like be like a vulture to kind of pick at the pieces that are left, right? Like I've multiple, you know, acquaintances or friends that are in TradFi more on like the distressed investing, distressed debt, you know, distressed investing side of things that, you know, they aren't looking to prop up a company, but they're looking to get in there and buy assets for, you know, pennies on the dollar. You know, I actually think one guy I was talking to, you know, someone that made a bunch of money off of like Mt. Gox, in trading, you know, distressed assets around kind of the Mt. Gox insolvency or hack. So I think there's going to be a lot of people that come in with no like real long-term visions, but I think there also will be an interesting mix of people who do come in with more long-term stuff.
Yeah. And I mean, I think the other thing that you kind of got like some gears turning for me, the other thing that I expect to see is more of these, I don't even know what you'd call these funds, like Two Sigma, Jane Street, Hudson River Trading, like more of these like traditional like quanti firms start to spin in the direction of Alameda as well, because they have really great infrastructure. They know how to build really tight systems, and they have basically like these armies of gigabrains, and there are huge markets to be kind of exploited in crypto. And so I also expected those firms, I don't know if they're going to do acquisitions per se, but those firms to start competing head to head with Alameda. And we're going to see a lot more like we're going to see a lot more competitive landscape in this like kind of like quanti like algo trading sort of area, and we're going to see a lot of like kind of easy opportunities close. One of the opportunities I foresee closing pretty quickly is like MEV. I know that's been a big thing this past cycle, but I think that's going to get really competitive really, really quickly. I'm almost certain of that.
And with these like quant shops coming in, it's gonna make DeFi just a lot more efficient, with a lot tighter liquidity, deeper liquidity, and just you're gonna not face as much slippage trading any amount of size anymore, hopefully, because that'll all get arbed away. I think we provided a lot of perspective on the CeFi side, but on the DeFi side, my guess would be we'd only have the L1s remaining, and pretty much the entire ecosystem on top of all the L1s would probably consolidate into maybe a few major ones that have various spokes of DeFi, like lending, trading, all in one. And then the L1s that do survive are probably going to be the ones that can scale into the next bull run. So everyone will be working on L2s that live on top of the L1s and hoping that they'll scale. But I think we're already seeing that the L2s are struggling to scale, given that Arbitrum recently stopped their latest promotional period because the fees were getting too expensive all of a sudden. So I'll be curious to see which L1s come out of this bear market.
In terms of the DeFi projects that you say offer everything, do you mean like SushiSwap, or what's like an example of
yeah,
one
it'd be like
exists?
SushiSwap, Trader Joe. Pretty much those two are the only ones that have enough coverage. There'll be some like CeFi DeFi hybrids like 1inch that can provide a little bit of both. And then obviously the lending protocols should survive. They'll survive anything.
If they do become more like consolidated for the DeFi protocols, do you think having all those features will affect their value accrual for their tokens?
Yeah, of course.
Maybe.
Okay,
I'll take that. Maybe. I think it depends on if they can actually, give value to their token holders. Right now you still can't really return any value to token holders. It's basically illegal to do so.
You can get around it with buybacks.
Right. Buyback and burn is really the only sustainable model in DeFi right now. I also think like there's a really good chance the tech really drastically changes. Like we mentioned MEV earlier. I think MEV is going to continue to be like a big thing for a while, as kind of like these fundamental tech changes. Blockchains may not look the way that we expect that we think they will. They may not, especially as these monolithic things go away, which I think we're kind of slowly learning. Maybe monolithic L1s, not maybe, we are learning like a lot of monolithic L1s just can't handle the throughput. They either break down or the gas prices get obscenely high. So there's really a world. I mean, we've already seen this a little bit with UIDX. They were essentially running their own app chain on Stark, or I guess it's StarkX. Now they're transitioning to Cosmos, which gives them a lot more like flexibility and things like that. There's a really potential world where we kind of go towards this like app chain idea, and everybody's, you have the no noisy neighbors, all that type of stuff. And so the way the whole ecosystem is stitched together looks drastically different. Is that this cycle? I don't know. But I definitely think like DeFi specifically, like the way CeFi is structured and set up, that's not changing, right? Like that's been that way for a very long time. But the way DeFi is kind of structured, I think has a chance to change really drastically in the next like couple of years. And I think that
really
may have very big implications.
Cosmos. That's a great point. That's a great point about Cosmos, showing potentially the future of like how things are going to be laid out and look like
it may
across the
not
landscape.
be Cosmos that ultimately executes on that, right? Like it may end up being something else. It may, who knows, Starkware or Starknet. I guess Starknet's a little more monolithic, but they may have some solutions, right? Like some other solutions may pop up. Yeah, I think it's like on the DeFi side, you're still building a very shaky ground. You know, a lot of the apps of today may not really be as viable, the next day unless you're like really staying on top of it and you're really on the cutting edge. You know, I mean, you can think of stuff like Compound, which is now playing catch up to Aave because they were, to their credit, they were kind of trying to do their own app chains before app chains were a thing. But it ended up being like a little bit of a fruitless venture for them. They ended up scrapping it and now are trying to play catch up a little bit. But yeah, I mean, I think you're going to see so many changes in the next 2 to 3 years of just like the fundamental tech and how people use it, how people want to interact with it. That it's going to be really, I think it's going to be pretty hard, difficult to make decisions or speculations on, certainly specific tokens, but even like the trajectory of a lot of protocols, unless they're like really committed to being on the cutting edge.
And this is the classic, like, it's all about the team, right? Like, the teams that are going to succeed and the projects that are going to succeed are the people who can move like super fast, keep up with everything, and just like, I mean, I think a lot of these products are going to be successful are going to be continually changing to meet like the changing landscape effectively, right? So it's going to be a rough place to be, but like people who are really hardcore are gonna come out on top.
Yeah, honestly, like that's one of the great, trying to identify those teams is one of, I think, like the best exercises you can do. And DoDX is definitely one of them. I've known those guys are OGs. I've known them for a while. And yeah, they work really hard. They're doing stuff that nobody else is doing, right? They're trying to push the envelope. They're starting from granted, they have a certain advantage in that they aren't trying to be super composable, right? Composability is great, but it also can be kind of a weight, in that you have to be where other people are. They are just trying to build the best exchange that they can. They don't really care about composability. And honestly, that for them, that's opened up like a much wider solution set than, like my company, for example. Traditionally, we literally are trying to, bring assets together and make, create abstractions around them and stuff like that, right? Well, that's fundamentally a different. It very much limits some of those things that you can do. So yeah, I mean, they're very much on the cutting edge, and I think trying to identify teams that are trying to be more forward thinking about some of that type of stuff is probably one of the better exercises you can do in the DeFi space.
Yeah, cool. Well, that's pretty much time for us. So it was great chatting with you guys, and I'll see you next week.
See y'all next week.
See y'all next week.
Thanks, guys. See ya.